CPA firm. We're we are Keller Williams preferred CPA. We do Joey Zakovich's taxes, and we do Scott Cotto. He's down in La Mirada. He's team leader in La Mirada, and then Jeff Anderson is the team leader of Pacific States, and the list goes on and on. Spend 5 minutes to listen everyone out. So this is me, my family, my wife, and my dog, and she's actually pregnant for my first child. So due date is in December. Excited about that. All right. So, like I said, my webinar, I guess my slides, we're going to go through, titled it Paycheck Protection Program Strategies for Loan Forgiveness. And so I'm going to go through how to get the loan forgiven and turn into a grant. And I'm going to go through some basics about applying for the PPP because they've extended the window, and it ends August 8th. But it looks like they're going to do a second round, and we can get into that. There's no law about that yet. They're just talking and floating some bills on Capitol Hill about that. So a roadmap, I'm going to, like I said, go through the PPP Basics about getting the loan. And then I'm going to go through some changes they made in the Paycheck Protection Flexibility Act, which was passed at the beginning of June. Go through the forgiveness process, and then give you a glimpse of the nitty-gritty. So, like, my objective is not to get you guys to be able to prepare the forgiveness application, because I have limited time, and that would be impossible, right? So my point is to give you a broad overview of this whole process, and really make you guys aware that you really need a competent professional to guide you through it. And we're here to offer our services, but so anyways, so yeah, so like I said, I'm gonna, in the roadmap, a glimpse of the nitty gritty, and that was that. I mean, I'm not gonna bore you guys with the actual calculations and all that stuff of the reductions and blah blah blah. But I'm just gonna give you a glimpse of it, just so that you know that it's complicated. And then we're gonna briefly go over other government loans in the CARES Act. Okay. So if you're the PPP application is different depending on how your business is organized. So if you are like not really organized at all, just a sole proprietorship, and so that would mean that you would submit your business activity on the Schedule C, what's called Schedule C of your individual tax return, then there's one way of applying, and there's a calculation based off of something, based off of your net income, basically. So your Schedule C, and this is the same as if you're an independent contractor. We get 1099s, and everyone at Keller Williams is a independent contractor, gets 1099s, whether they get 1099s for themselves to their Social Security number, or they get a 1099 to their business's identification number. Everyone's an independent contractor, but if you're organized and you have a business and you get the 1099s in there to your business's identification number, then there's a little bit different way of calculating how much PPP you can stand to take. So first off, sole proprietors. So this is it's really easy, right? So you have your gross revenues, you have your expenses, and then it comes down and you have your net income. Your net income is the number you use. It's 2.5 times your average monthly net income from 2019. So you take your 2019 tax return, you get that net income number. I think it's line 31 or 30 something, 35, I think maybe also. But you get that number and you divide it by 12, and then you get 2.5 times that average monthly net income. So you divide it by 12, and then you multiply it by 2.5, and that is the amount of PPP you can get. There is a limitation. If your net income is over $100,000, then you're limited to $100,000, right? So that number basically, if you take the number, the $100,000, and you divide it by 12, and you multiply it by 2.5, that number is $20,833. So, and basically the number that you're going to multiply your net income by, right, is 20.833%, 21%, let's just say, and that give you the maximum amount of the PPP loan you can get. So for these people, for sole proprietorships and people that file their taxes on Schedule C, don't have a business entity, you get 100% of the loan is forgiven. You don't have to spend it on certain things. Right off the bat, 100% is forgiven. It's the Paycheck Protection Program. So if you're a business entity, you got to spend it on payroll, right? But if you're a sole proprietorship, just a one-man shop, your net income from your business activity basically is your paycheck. So they give you 100% forgiveness on that right off the bat, but you must apply for the forgiveness. If you don't submit a forgiveness application, then it'll be a loan, and it's really good terms, 1% interest over 5 years, but it's still a loan, and you still have to pay it back. If you apply for the forgiveness, then you'll get the forgiveness as long as everything is on the up and up with your numbers, because it's 100% of the loan is forgiven, but you still have to submit the application, and you still have to have a couple numbers on there, so that's a real big benefit of being organized as Schedule C. And also, originally they had 8 weeks to spend the money, and you know what? This doesn't even really apply actually to sole proprietorships, because you have you don't have to spend the money on certain things. So you just get the money, and basically that's that. You got to submit the forgiveness application, but that's that. So you don't even 24 weeks to spend the money is the maximum amount of time for business entities, but for a sole proprietorship, you can put the money in a savings account, and it's your payroll, right? So you can spend it how you wish and however long you wish to spend it. So for business entities, and this is like corporations and S corporations, it's based off of your 2019 payroll, right? So your employees and any owner compensation that you paid yourself, it's 2.5 times your average monthly employee salaries, and then the business owner gets to include their compensation as well. So it's 2.5 times both of those salaries, right? The employees and the owners. It's 2.5 times the monthly average for 2019, but the business owners have a little bit more. There's restrictions placed on them, and we'll go through them. So for this, you must spend 60% on payroll, and up to 40% of the loan can be spent on business rents and business utilities like electricity, gas, water, internet, telephone, other things like that apply for utilities as if they're for your business. Unfortunately, home office deductions, like if you run your business out of your home, those don't count, right? So you have a certain amount of rent that you're able to deduct for your home office, right? But you are not allowed to get forgiveness if you spend any of your PPP money on that rent. You're not allowed to apply it for forgiveness. So, once again, you have to apply for forgiveness, and then you have 24 weeks to spend the money, basically. So you get the lump sum, and then you pay your employees, every other week, or every week, or once a month, or whatever, for this 24-week period, 6 months, and then all of the money should be exhausted. And for this, the forgiveness is reduced by two main factors. And like I said, kind of the point of this is to get you to familiar with those. And so we'll go through those two really quickly. So in the Flexibility Act, they, like I said, they originally passed the CARES Act, in March of 2020, and then they passed this Paycheck Protection Flexibility Act and loosened the rules about the Paycheck Protection Program, PPP, at the beginning of June. So they changed the 60% rule from a cliff, like you had to spend, originally you had to spend 60%, or you didn't get any forgiveness at all. So you had to spend 60% on your payroll, or you didn't get any forgiveness. Now it's like a proportional allocation, right? So if you spend 30% on your payroll, then the amount that they're going to forgive of the extra money that you spent on your rent and utilities is reduced by a proportional allocation. So they extended the 8-week period also. Now it's 24 weeks. And, the borrowers that had the PPP before they issued this Flexibility Act and it became law, they have the option. And the ones that, took the loan after it, and the date is June 5th. After June 5th, you're only allowed to take the 24 weeks. And we'll go through that. 24 weeks is better anyways, for a lot of reasons, for a couple of reasons, not a lot. But so they revised the application for forgiveness, and then they modified it. Originally, it was 2 years to pay it back at 1% interest. Now they've given you 5 years. So payroll considerations, right? I said that there were some considerations about payroll, some limitations on owner salaries and stuff. So once again, like in the Schedule C, your employees are limited to a yearly compensation of $100,000. So if you pay them over $100,000, the maximum that you're allowed to give your employees is different. Schedule C was 2.5 times your average monthly, limited to the $100,000. In this case, if you go with the 8 weeks, it's so there's beyond that. The step back. There's 52 weeks in a year, right? And so if you go with the 8 weeks, your employees are limited to 15,385, which is $100,000 divided by 52 weeks in a year multiplied by 8. If you go with the 24-week period, the maximum amount that you can apply for forgiveness of payroll that you paid your employee that made over $100,000 is $46,154, and that is $100,000 divided by 52 multiplied by 24 weeks. So this is the big advantage of not only that you get 24-week period and you have longer to spend the money, but this is the big advantage of that, is that the maximum amount that you can pay your employees and have applied for forgiveness if you paid them over $100,000 in 2019 is radically increased. That's for employees. For owners and owner shareholders, that they're limited to their average yearly compensation in 2019. Again, it's capped at $100,000, but it's the average monthly salary times 2.5, right? So it's divided by 12 multiplied by 2.5. So it's that 21%, basically 21% number that we did when that applied to the Schedule C's. Excuse me. So it's a maximum for owners, and it's a max that they can pay themselves a maximum of $20,833 if they paid themselves $100,000 in 2019, but they're limited to what they paid themselves in, a percentage of what they paid themselves in 2019. So if you only paid yourself $10,000 in 2019, then you're limited to basically that 21%, which is actually 20.833%. So it would basically be off of $10,000. It'd basically be $2,833, or $2,083. Excuse me. So you know, I hope you paid yourself a whole lot in 2019 if you are an owner of your corporation and or shareholder of the corporation and you're applying for this, or you have already applied for it. So forgiveness is that's how to apply for it, and those are some of the rules and limitations that apply in your application for the actual loan. Once you get the loan, then you spend the money, right? You spend the money throughout 24 weeks, and you spend it on payroll, and you spend it on rent, business rent, or business utilities. Most people probably don't even have that, so just spend it on payroll. Then when you come up to the 24 weeks is up, then you need to submit the forgiveness application. And the way it happens is you submit the application to your lender. So the bank that actually gave you the PPP, you submit your application to them. They review it and come back to you if they have any questions. If they don't, they forward it to the SBA, which is the Small Business Administration. It's the government. It's the government organization administration that is responsible for giving out these loans. So then the government reviews it. If they have questions, they contact your bank contacts you, blah blah blah. If that's straightened out, and then eventually they give the lender the final word, and the lender gives you the final word about whether you are forgiven. You have your amount, the amount that you originally applied for forgiveness is accepted or not. Okay, so for sole proprietorships and independent contractors on the Schedule C of their individual tax return. So I mean, if you have a corporation or an S corporation, it submits its own tax return, right? And that's what you go off of. But in this case, just your individual tax return, like I mentioned before, 100% of loan forgiveness is possible. This doesn't apply anymore, and I should have deleted it. I'm sorry I didn't. Don't even. So the up to 25%. Don't even worry about that. And there is there is an easy application form, but so there's the regular application for forgiveness, and then there's an easy application for forgiveness. That easy application is not really so easy. It requires you to have some numbers on there and then some calculations also. Granted, they're a lot easier than the standard one, but you still need guidance. Okay, so for business entities, there's two main things that can reduce the amount of forgivable loan that you have. So say you took a loan, you spent it all on payroll, and you paid yourself a little bit in 2019, so you took that amount as well. So you spent the whole amount and you spent it correctly. It's all on payroll. Then we need to go through two other calculations to see if any of the forgiveness is being reduced. And the first one that we go through, the first one to be applied is the payroll reduction. And what that is basically is if you pay, so pre-COVID and post-COVID, right? So pre-COVID, which is basically it's Q1 of 2020. If the hourly wage or weekly salary that you paid your employees, if that's reduced by more than 25% in the post-COVID period, then they require you to reduce the amount of forgiveness that you have. And so here's an example. I'm hesitant. I'm running through it, but it's pretty easy, right? So during 1/1 through 3/31, which is Q1 of 2020, Martha got paid an average hourly wage of $35 an hour. But during the 8-week or the 24-week period that after they got the loan, her hourly wage was reduced to $25. So That's a $10 reduction, and $10 is 28.6% of $35, the wage before. So we have to, there has to be a reduction that we have to calculate because it's over 25%, right? So the amount that her hourly wage is reduced was $10. You know, if she worked an average of 40 hours per week during quarter one, then it's 40 hours a week, and then or $10 times 40, right? And then times the 8 weeks. And if you're going to do it under the 24-week period, say you chose either the 24-week period or you had to choose the 24-week period, it would be multiplied by 24 instead of 8. So basically, it would be $400, right? So 40 hours a week times 10, $400 times 8 is $3,200. But times 24, you know, I'm not quite sure what that is right off the top of my head, but it's more than 20. It's more than $3,200. But that's the way the reduction works for payroll. Okay, there's also what's called the employee full-time equivalency reduction, and that's the mouthful, but basically that's the headcount reduction. So basically, they count the number of hours pre-COVID that you had your employee working on average, and then they count the number of hours that you had them working post-COVID, and if there's any reductions to that, then they apply a percentage to reduce the forgivable amount of PPP that you can have forgiven. So here's an example. I'm not going to go through that. So the forgiveness application process, you know, like anything else the government produces, man, it's complicated, and there's inefficiencies, and they haven't even really set it up yet exactly. They're not even taking applications yet, and it's been if you got the loan as soon as you can get it, then your 8-week period has been up for like a month. But anyways, government, we know the government's inefficient with things. But it's so the actual forgiveness application, once you do it, once you fill it out, you have to submit it to your bank, and then your bank will have you have 3 months after you come up with either the 24-week period, basically 3 months after that, to submit your application for forgiveness to your bank. Your bank has 60 days to review it, and then they ask the government for the payment, and then the government will have 90 days to review that your application from the bank. Then they pay the bank when everything is approved, and then the bank says, hey, your loan is now turned into a grant. We got payment from the government, so everything's fine. So the other CARES Act loans, there was 3, right? There was the PPP, Paycheck Protection Program. There was 2 EIDL loans, right? And EIDL stands for Economic Injury Disaster Loan. There was an advance that they were giving up to $10,000, and it was completely forgivable. It was a grant, and that is no longer applicable. They're out of money for that program, and they're not going to refund it. It doesn't look like it. So that program's dead. If you got that, it has some interplay with the PPP, and we'll go through that. But the other economic injury disaster loan is an actual loan. It's up to $2 million, and it's you have to pay it back. It's 3.75% interest, and it's over 30 years. So it's low payments because of the length of time that you have to pay it back. But you know, if you end up doing that and you end up paying it back over 30 years, then even at that low amount of interest, you end up paying about 1.5 times more than the loan you took originally in interest. So, you know, if you got like $37,000, and you're going to end up paying about $64,000 back. So, but if you need it, you need it, you know, and it's been a lifesaver to a lot of our clients, the PPP and this EIDL. So the emergency advance, right? The program that it's out of money. If you got that and you got, say you got $8,000 from that, right? You also applied for the PPP and you got approved for $138,000, and you got $138,000 from the PPP program. So the maximum amount of forgiveness you can achieve is 130,000, because they have to reduce that 138,000 by the $8,000 of EIDL emergency advance that you got. Because basically, they give it to you and they say, hey, this is a grant, but they require you to pay it back if you get the PPP. You know what? And if you hadn't got the PPP, if you just got this grant, you don't have to pay it back at all. It's truly a grant in that case. And then there is no interaction between the PPP loan and the EIDL loan, which is the injury disaster actual loan, up to $2 million. So you can actually apply for it and get both of them. Okay, so last slide, call to action. So we would advise you on your situation. If you want to engage us, we're experts in this area. We can advise you on your situation. We can consult with you for $250 an hour, or we can complete your forgiveness application, and it's starting at $950 for one employee on payroll. So like one employee, S corporation, or sole proprietorship, and then it's $250 per additional employee, and then with a full payment of the forgiveness application, we'll actually apply for you for free. And it's getting down to the last couple of days to apply. I know the actual date is August 8th that the government is going to stop taking applications, but a lot of the banks stop taking applications a week before. So originally, before they extended it, it was June 30th was the date, that the last date, and the bank stopped taking applications about a week before that. Most banks did, and like all banks stopped taking applications about 4 days before that. So I don't specifically know about this new extended due date, but history serves that about a week before. So you really want to, if you haven't applied for it and you're going to apply for it and you're thinking about applying for it, you really want to get hold of us, and we can consult with you, and we can meet that application done and in before the deadline. So yeah, here's the first slide again, my beautiful family again, and I hope you enjoyed it. And I will be available right now for the next half an hour, 25 minutes, to respond to questions. Thank you, everyone, for coming. So KW Larchmont, Tara, it's the corgi is, her name is Cinnamon, and it's she's the most beautiful dog in the world, to me at least. No one has any questions? Okay, Amal has a question. Do you have to have a W-2 to qualify for the PPP? So no, if you don't have a W-2, if you are an independent contractor with a 1099, or if you don't even get a 1099, you just through your own bookkeeping, keep track of your revenues, and you submit. You don't submit a separate tax return. You only submit your individual tax return. Then no, you don't have to have a W-2. We can take that net income number and then apply for the PPP based off of that. If you have a normal W-2 job, then this isn't for you. This is for your employer, right? Because if you're an employee of a company and all you get is a W-2, then and it's somebody else's company, then they need to apply, and then they get the money, and then they can continue to pay you the paycheck. Okay, Star says, what date would we? Okay, what date? Okay, so they only require you, like, so okay, Star, I don't know your situation, whether do you know whether you're a Schedule C filer, you file only your individual tax return, or if you have a business entity?
Yeah, I do have a Schedule C.
Okay, so the business account that you're asking for, is, you basically, most of the lenders require that you submit like an account statements for a bank account, just to prove that you were in operation as of February 15th, 2020. So I guess that would be February 15th, 2020. But you don't have to have, in your case, you don't have to have a separate business account, although I would totally recommend that. But you don't, for these purposes, you don't actually have to have one. Just any bank account. So if you run you run everything through just one bank account, then you have that bank account, and that's the only one you have. So that's good enough.
Oh, I thought initially it was just a business account needed to be open by a certain date, but a personal account is fine as well.
Exactly. For like the purposes of proving that you were in business as of February 15th, 2020,
Great.
right? But because they want to know that you didn't just create this entity, or that you didn't, put together a false, basically, tax return to, like, have a false Schedule C so that you can get the PPP, right?
Hmm.
So
Very good. Thank you so much.
you're welcome. You're welcome. Okay, so Day Park has a question. I thought the PPP doesn't apply to most independent contractors, like one-person realtors. No, it does. It does. It applies. You submit the results of your business activity with your individual return. So this is a good point. You have to have your 2019 return filed, right? Um, or it actually doesn't have to be filed, because you can have it on extension, right? But you have to, for the lender's purposes, you have to have a draft of your Schedule C, which is a specific form that it's a business profit and loss statement, basically, right? And it's the results of your business, and you have to have that prepared as like a draft, and for the actual lender to see, to prove to the lender that yes, you actually do qualify for this amount of money. So from a mall, how about if you own an S corporation and no and K1, or no pay? I'm sorry, no payroll. So okay, so if you, so no, you have to um, pay yourself a salary from your S corporation in 2019 to apply for this PPP. So you did not pay yourself a salary from your S corporation, then it's not applicable to you. Um, so yes, and yes, that requires you to have a W-2. So yeah, you basically, yeah, run through the salary. You have to run it through the payroll system, right? You got to pay the payroll taxes. You have to submit the payroll tax return to the government, and then you have to have a W-2 issued, right? So that you can do your regular individual tax return. So unfortunately, unless you want to, um, pay yourself a salary, we can still do that. The a payroll tax return would be late, and there would be penalties and interest applied to it. We can possibly get you out of the penalties, but we can do the payroll tax return, and then I don't know if you've already submitted your 2019 tax returns, and if so, it gets a little bit more hairy, because then we have to amend the returns as well. We can do that. but it's just, it's more cost for us. Yeah, the W-2 payroll is required to qualify for PPP if you carry on business as an S corporation and you submit the S corporation tax return, which is the 1120S. Then yes, you have to have paid yourself salary, which is a W-2. You're welcome. Oh, shoot. So I'm going to put my office number in here. You can talk to my assistant when you call this number. It's our main line, and her name is Erin. She's really, really great. And you can call her, and we can get your situation straightened out. If you would rather email, here is our email. And if there's no more questions, is there any more questions? Okay. Well, thank you, everyone. And I enjoyed it. Thank you. I hope you got something from this webinar. And we will be at Larchmont again, giving another webinar about another aspect of taxes and financial life. Definitely, we'll be there. So stay tuned. And thank you, Tara, for moderating this.
Thank you, Brad. We appreciate it. And very cute dog.
Thank you. Thank you. I'll tell my wife, she'll love that.
All right, you guys take care, okay?
All righty. You too. Bye-bye.
Thank you. Bye.